Stocks suffer 2-week fall. One big name is betting on gold. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, we welcome back Sam, who's been watching the recent volatility in the markets and, in fact, warning us about the potential for this to come, and it certainly has been playing out. How are you going today, Sam?
Hello, good, Chris. How are you?
Yeah, very good. Now, you've been talking to us about this for a little while, and last week in particular, you gave quite a sobering recap of the market. Can you sum up what's happened for anyone who might not have been paying attention?
So for the last 2 weeks, everything's pretty much been in the red as far as stocks are concerned. The Nasdaq had 2 days late last week where it dropped 1,000 points, roughly in total. In the S&P, also, suffered greatly during those 2 days. Friday, there was a little bit of a bounce with inflation data coming out. So it was just kind of a gasp for air, but it still finished the week in the red. And recently, it looks like investors have been running away from the tech sector because their, P&E ratios are out of control. They're being traded at many times what they're earning. So investors have been going towards other things, such as, the Russell 2000. They're just looking for quality and valuations that are a little bit more realistic.
And that sort of shift, I suppose that's a general shift in sentiment, really, isn't it? That's what you do in those situations. You go for those quality names over the other things that were popular before that.
Yeah, the Russell 2000 usually does well when these tech stocks start to overheat too much.
Yep. And we've certainly seen that. I mean, no one can argue that we haven't seen an overheating tech sector. Now, you mentioned specifically in the article one big name who's been betting on physical gold, someone you like to talk about, you've mentioned before. Tell us about that.
So that's Michael Burry. And look, I'll just start by saying this. Usually Michael Burry's referenced in videos as, just like in The Big Short, where he called it a huge collapse and he made a lot of money off of it. But that's not necessarily all he does. Just to remind people, he runs an asset management company and he manages over 100 million US dollars. Last I checked, it was about 103 million US dollars. And that has to stay afloat. So it's worth looking at someone who's working with this much money and what they're doing. The other interesting thing is what he's done is he's made the fifth largest holding in his portfolio physical gold. So in a way, that's contrary to what he usually does because, I mean, he's an expert at finding downturns. He's a famous short seller. So he likes when crashes come because he's smart enough to time them pretty well and make a lot of money. So it's quite telling that even he's saying in a way, look, I don't really know what's going to happen. I better buy some gold because if I miss the timing or things don't go to plan, at least I have something there that's making a return. So in total, he's gone into Sprott Physical Gold Trust with 440,729 shares, and that's about 7.37% of his portfolio. So far this year, that's been the fifth largest holding for Michael Burry.
And that is interesting too, that when you talk about physical gold, and I know that Sprott Trust, focusing on the physical there, for someone like him who's usually to short things, you're really trading in derivatives, you're playing around the edges. That's telling in itself a little bit, isn't it? To the fact that he's looking for the physical stuff. It's not just about the price of gold. He wants the physical underlying there.
Yeah, so what he's invested in is a lot like Ainslie's storage, where someone can have a huge amount of gold and it's essentially stored there. Obviously, he's not moving tons and tons of gold around or burying it in his yard, but he has opted for physical gold trust.
Yeah, and I think that is telling, possibly to do with, if we turn the focus slightly, what we expect ahead. It looks like there's a potential bombshell of economic data coming. We've got a lot on the horizon. We've got very high levels of anticipation around Fed funds decisions and all of that ahead. What announcements are you most looking forward to? Because I know you look at all this stuff in quite a lot of detail. So maybe what are you looking forward to, and what do you think the impact potentially will be here?
So being in Australia, the biggest thing we have to look out for comes around halfway through the week. So that'll be Wednesday at 11:30 a.m. Melbourne, Sydney, and currently Queensland time as well. That will be CPI data. So that's going to be, that's going to be a big deal towards anyone who wants to buy gold or silver, or anyone who's looking at investments in Australian dollar, because that could seriously change, whether the Australian dollar goes up or down in value. Then later that night, we have the Eurozone CPI. So that'll be 7 p.m. And what that'll do for us is that'll just give us an idea of what central banks in general are doing, because the Eurozone, I mean, it's a huge player in the world market. We want to see what they're doing. And that could have an effect on, people speculating what bigger, other entities will do. For example, the Federal Reserve. They've claimed that they don't follow what the Federal Reserve does or copy what the Federal Reserve does, but they've gone completely against that immediately after saying it, and they have done pretty much the same thing. So I'm not surprised that central banks are talking to each other. And then the big event, potentially the biggest event this week, could be the FOMC press conference. Now, the interest rate decision is coming a half hour before that, but a lot of investors will just look at the interest rate decision and make investment choices off that. But at 4:30 a.m., okay, if anyone here in Australia is awake for that, 4:30 a.m. comes the press conference, and that's where reporters can catch the Fed speaker off guard and throw out a question that they might answer in a certain way, or use a specific word a couple times, or come off as aggressive or come off as nervous. And the press just eats that up, and traders just eat that up and move the market just purely based on their words. And then finally this week, we do have the non-farm payrolls coming out as well. So that is kind of a last chance, I guess, to trade for the week. That'll be Friday at 10:30 p.m. our time. So put simply, that's the jobs numbers in the US, excluding agriculture. And that's also just a huge announcement that could swing markets. So it's going to be a very busy week, and it looks like it's just going to heat up more and more towards the end of the week.
Yeah, there's so much there. Just probably to help people out at home who are thinking, okay, it's okay for Sam, he's in this space, he understands it all. How do you process that yourself, or how do you digest that? Are you looking at websites? Are you just sort of keeping it up on your feed on social media? How do you sort of stay atop of all of that data that's coming out?
Well, there are data feeds, there are economic calendars people can look at to see the numbers come out. Sometimes they can be a little bit of a headache because there's so much going on this. I guess you could say it's like a data ticker coming out.
Yep.
But one thing you can do is there are a few websites that, publish the result as soon as it comes out, and they give a general statement like this is good or bad, for the Australian dollar, or good or bad for the US dollar. So it is possible to find news really shortly after it comes out. Even just jump on Google and type, for example, FOMC press conference or non-farm payrolls just in Google News, and you can find usually the result within a couple minutes of it coming out. There are writers who will actually write 3 or 4 articles in advance in case one scenario happens, and then as soon as it happens, they'll race to publish it within seconds of,
because they want to be the first one.
Yeah, and it's worth it because a lot of people are looking and making big decisions based off of it. So I guess just make sure the articles you read are accurate. Maybe check a few, because people have been very wrong in the past in their, I guess you could call, short-term excitement about data coming out.
Well, I think for my part, I'll just wait to see your analysis the next day or a little bit later in the morning, because 4:30 is probably, particularly on that big FOMC one, that's probably a little early for me. But I'll be certainly paying attention to see what you have to say about it. But thank you for your work and keeping us up to date on all of this, as you always do. So thanks for your work on that, Sam.
Yes, being half asleep at 4:30 a.m. and making huge financial decisions can be a pretty bad idea sometimes.
Yeah,
so
not a good one, but that's why I leave it to you. So
all right, thanks, Chris.
thanks everyone for watching. We'll chat again soon.